Good morning, traders. I'm Michael Sabo, Senior Market Strategist with RJO Futures here in Chicago on February 4th, bringing you some commentary in the energy markets. So let's get started. Crude prices a little bit softer this morning. Currently, the March contracts trading down around $50.35 a barrel. It's off about $2.70. Brent's off about $2. Nat gas is down about 6 to 7 cents. RBOB's off about 7 cents, and the heat's off about 4.5 cents. So a little bit of a weaker tone here. Big news this morning. EIA data coming out here. It's kind of what traders were focusing on. Traders were looking for another build in stocks, and they weren't disappointed. The expectations were for a build of around 3.5 million barrels. Came in a little bit bigger than that at around 6.3 million barrels. So currently, our current stocks right now are standing at about 413 million barrels. You look at our all-time high stocks for this time of year. Sitting around 371. So as you can see here, the stockpiles are currently running, we're making new highs here with the current stocks. And that's obviously one of the reasons why we've seen crude prices trade down to these lower levels. But the one thing I want to point out here, and I talked here in last week's post, for those of you who missed it, I'd encourage you to go ahead and take a look at it. Crude prices last week were trading down around $45 a barrel. Yesterday, crude prices actually hit a high here, a new most recent high of just over $54 a barrel. We've seen a $9 reversal in the price of crude since last week. And I think, a lot of that, it's something I've mentioned in last week's post as well as several other posts here, is that you look at the way crude prices have been selling off here, December and January. We've really seen prices come down here quite a bit. And, once crude prices got to a certain level, I think you're starting to see, we've seen some commercial interest pick up, and that was evidenced in today's EIA report here. You look at the refinery capacity utilization, it's running about 3% higher for this time of year versus last year. And I think you're starting to see a little bit greater demand for it. Even though there's been builds in the stockpiles, I think, the demand side is starting to pick up here a little bit. And I think what's real important here is you look at the last three trading sessions, including today's session. This is the first time in 6 months that the entire the price action we've seen in the last three sessions has been above the 10-day moving average. And so the technicals on it here, the market's been very oversold here, I think, for a period of time. With the market starting to turn up here, I think the shorts are starting to get squeezed a little bit. And we're starting to see some additional buying interest coming in. And with that, I think that's what's going to give the market the potential here for prices to start turn. Now, I'm not suggesting that we're at a complete bottom here, that oil prices have bottomed, although some people have been calling for that. But what I am suggesting, and in my opinion, I think that there is some really nice upside potential in this market. I think traders need to be cautious, though, and there's some different ways and strategies on how you can play that, and I'd encourage you to contact me so I can go over a couple of different ideas with you. The other thing I want to point out with here today for traders, so far today has been an inside day, so we are getting a real nice technical setup there. If you're unfamiliar with inside days and how to play that here, again, give me a call and we can get into a little bit more detail on that. Futures and options on futures may involve substantial risk and may not be suitable for all investors.